Yes.
All right. Welcome, everybody. Today is April 19th, and this is Tape Reading Lab by Wyckoff Analytics, together with William Reardon and Roman Bogomazov. Today, as usual, as in every session for the Tape Reading Lab, we are going to discuss the current markets, including Bitcoin. So a lot of developments there over the weekend. So there's going to be quite a lot of time spent on that.
It's interesting.
Absolutely. Yeah. As we discuss any markets or any chart, the goal for you guys, the students of this particular session with this particular class, is just to listen, to extract any type of concepts on chart reading, and then try to implement that with your own analysis. That's kind of like the key. William and I, we usually go into the, kind of like deep discussions about how we analyze the chart, what we see on the chart. And then, students usually ask this question, could I ask a question? You could definitely ask the question, but if we're going to be in the groove, if we're going to be in the zone, we might not even react to the question. So it just kind of like, if this is going to be the right question at the right moment, and you're not going to be talking about, let's say, the economy or your view or like of why the market should go down or should go up, that type of thing we probably will not discuss or answer.
No, we discuss what we see on the chart. We don't take into consideration any other kind of fundamental sort of market outlooks.
Absolutely. Yeah. So this is the class where we discuss the charts.
Yes.
We're going to have the tape reading exercise. This is a simulated trading exercise. This is something to show you that we do in each class. The goal there is just to, again, analyze it together and allow people to see the progression of a thought on chart reading. So we'll do this today. And then again, if any questions, we'll see if we could answer those during this session. This is the open door class today, so we have a little bit more students, but regardless, our agenda is going to stay the same. For those of you who are interested in registering for the tape reading classes, $125 per month. That rate is going to be a legacy rate before June 1st if you're registering. It's going to stay with you until you actually with us, and then it's going to be 150 after June 1st. And we are getting together each Monday from 9 to 10:30 Pacific. Go to wyckoffanalytics.com, register, and you will receive the access to previous sessions and also the webinar links that are for upcoming sessions. Well, with that, William, let's look at the market. So, except for Bitcoin, is there anything else that catches your eye right now with the markets?
Nothing too obvious per se at this moment in time. I think all the markets are fairly readable.
Okay. Well, let me ask you this question. Let's go to NASDAQ. And we have to discuss a couple of things with NASDAQ, and then we'll switch to Bitcoin. So guys, do not worry. I received so many emails over the weekend. William, I was trying to get a day off, from the markets. Couldn't do it. This Bitcoin shakeout is just like, and there are quite a few questions there.
I can imagine.
Yeah, let's talk about NASDAQ. So let me ask you a couple of questions. Well, the first question is, obviously we are at the point of the resistance.
Yep.
We had a commitment above this line right here about that resistance cluster. We just kind of went through that, and we've discussed this in so many details in the previous sessions. And then look at how we're committing on this bar right here. Then we have a rejection where almost the whole bar is being negated, but there is no commitment to the downside.
However, there is a swell in volume though. Yeah, so there's something going on here.
Yeah, so there's obviously supply there. So we want to see on the next day what kind of follow through we're going to have to the downside. No follow through, still to the upside. So there is no reversal yet on that particular bar, but we're not gaining a lot of ground. So close to close from up bar to up bar, not a lot of progression. And let me expand this a little bit so that we would see it better. So we're talking about this bar, no follow through to the downside after this bar. We're going up. We're not really fully committing, and then the next bar is just a small spread, and then it's being rejected. So it feels to me that we might be kind of like putting potentially, or at least trying to put potentially a top to this upswing since this low right here. So what are your thoughts on this? Just general thoughts.
Well, first of all, today is kind of expected. Up at these highs, as you've rightly noted, we've seen supply. However, we immediately reverse so-called supply here, and we would expect some form of continuation from this bar. We could read this as slight ease of movement, okay, after this inability to react with all that volume. However, it does tell us there is supply in the market. And then we get this bar. All for all intents and purposes, same volume, very small spread. Again, supply. But this is kind of more overt supply than this bar, I would say, more hidden supply. And then we're getting resolution to the downside. So from here, I think this is the important bar. We need to see how much supply emerges for today. Okay.
Well, also, William, probably result is also very important. I mean, what are we going to do today? Are we going to maybe like be within the above, let's say, this support, which is becoming somewhat on a short-term basis an important support right here. So
indeed.
Resistance, support. So what are we going to do here? So as you rightfully said, so what is going to be the final effort for the session? That's number one. And then what is going to be the final result? Okay, let's look at this from a different perspective. So sometimes, guys, during the session, we actually live trade. I mean, like if there is a setup, if there is something that is of interest to us in the moment, we will initiate the trade. You know, it doesn't really matter the instrument. Usually it's going to be either, you know, some kind of market proxy. So we would trade like E-minis, or it would be oil, gold, maybe even Bitcoin. We haven't done anything with Bitcoin. But this is the trade that we've had last Monday. So on the 12th, and this was initiated on the hourly chart, even though we saw, you know, some movements on the 5-minute, but on the hourly, it just looked, William, as if we were ready to break out of this formation. And just a lot of bullishness right here. I don't think that we need to go through this. But for those of you who saw this trade unfold in real time, we said that our stop loss is going to be here, more aggressive stop loss is going to be somewhere here. None of them were hit. And we said that the key is going to be just getting out when supply is going to start emerging and when we're going to have increase of the downward result. And William, I would say like this bar right here is just screaming for the exit.
It is, yeah. I mean, if I think we discovered this trade, we exhausted all possibilities, and I think we talked ourselves into making this play at the time. The time this was printing, because as we was discussing it, I think you got the your finger was itching, and you're like, okay.
Well, I saw something and it's just like, yeah, no,
yes,
like, gotta go.
It makes sense.
Also,
nice, and we saw the pop,
this is kind of a similar spot, would you say? I mean, there is some kind of like I see in this price action where there are quite a lot of tails, like up and down tails. Usually that would tell me like supply is coming in, demand is coming in at the same time. When I see this type of spots, my reaction is always like, what is the result? If the result is great, if we don't go down like we didn't here, we're going to go up. Look at this here again, kind of the same story. So this was no different. You know, we are kind of seeing ups and downs in tails, supply and demand are coming in. So you need to assess what kind of result you have here. So absorption or possible absorption. So what does it mean? Possible continuation. And that's what we have on the upside. William, could you talk to us a little bit maybe around this area right here? What do you see here?
Well, we get a good clean break into new highs. Fantastic. And then we can see the momentum deteriorate a little bit. And if you're from, you know, the back up to the edge of creek school of thought, we could draw this across here. We have some kind of trading range. We note that we hug here again and we absorb our way through. So we could expect a potential test down here, but we don't. There's no supply. And then again, we get good continuation to the upside, good solid bars. Then we hold. Interesting, this price action. But then we start to drift up higher. And I know this is overnight action, but there's still kind of no real commitment to the upside. And then, as we can see, boom, we come down and we eradicate, sorry, if you clean up the chart, Roman, on these two bars, although we do close off the lows, if we have a look at how much progress is made, these two bars, we wipe out how many hours of trading. And this breakout bar here, importantly, that broke us into new highs. So this is telling us, you know, something has changed. All that means to me is that we're probably going a little lower for testing. So if you're in position, you need to make the call. And where's the market likely to test? Well, we would say in this congestion area, okay, which it does, which is near a trade. So you should be looking to cover around here.
Yeah, and this breakout, like this specific bar, was not really tested right here. I mean,
No.
This one was tested really nicely, and it kind of suggested that we're probably, the test itself suggested that we're probably close to the top, or at least to the slowing of the momentum because of the ability of the price to retrace everything that is in this bar. So this one was not tested, so a natural target here after the reversal. And I think, you know, this was in the US session, so this was a clean exit. And I mean, I would argue maybe if it was Asian session or European session, then, you know, not necessarily I would want to close and I want to see how the US would behave. But because of how US behaved here, this is your trade right here. And we kind of done. So a nice little trade. Like what, a day and a half, maybe 2 days, something like that.
Yeah, but what I like specifically about this trade is the structure. About how we come up, okay, then we come down, we slam straight into support, and it's immediately met with good buying. So this is the drive down, and this is the drive up, and we can see that the drive up, the buying is better than the drive down. And then what happens? Well, we just hold this level of support, and we could see, you know, because obviously this is additional strength, the inability to test down here. And then we saw the towers and we could just see the demand coming into the market. And for all those reasons and a lot more, if you go back and watch the previous video, it was a very nice little play. Good call on yourself there, Roman.
Well, thank you.
But what you made here, if you're going to compare, or if you're thinking about exiting, if this was the Asian or European session, just bear in mind that we should always compare and contrast similar bars at the similar time. And I think just looking here, you know, there are some bars that do print like this in the overnight session. So just bear that in mind.
Okay. Well,
you call them analog bars, don't you, Raymond? I think.
Right. Yep. Let's jump to something else. So again, Bitcoin is obviously extremely interesting. The way how it unfolds right now. Let's quickly go through the trend definition. William, what would you say the trend is?
Well, certainly the trend is high. We can see it's running out. Well, the thing is, it is running out of steam. Every push up, yeah. If we can see this push, this push, this push, you know, we definitely do have shorten of the thrust to the upside, and then we want to analyze the reactions thereafter, and we can see every, say, push 1, push 2, push 3. We can see that every push down is resulting in less progress, which of course is bullish. But then what happens? Then we come to the highs, then we break out. And there's no continuation to the upside. And now we're beginning to come down, and we see this kind of supply, which of course is this the highest supply we've seen in this uptrend? Yet it closes off the lows. But what do you note about every other reaction? Well, if we kind of look at this bar, we have this here, we kind of have this here. So it kind of suggests that we're going to be in some kind of trading range, or well, at least what, 5 to 10 days, perhaps even longer, because of the magnitude of this supply that has come into the market. You know, probably the rest of this week we would see some sideways action. But I think if you look to the weekly, there's something of interest, Roman. I think we come from, oh, can you, yes, we do have an upthrust here, a hidden upthrust. And we would expect some form of downside continuation. Now, we just need to see how much downside continuation.
Isn't it such a different picture on the weekly, guys, right? I mean, Will, thank you for bringing this to our attention.
No.
I mean,
you're welcome.
This is where we are. This is the trading range. There is nothing going on beyond that. We're just fluctuating up and down, up and down. And when you go to the lower time frame, you're gonna see those type of shakeout type of patterns. And you still have to take this in the context of the overall structure. What is the overall structure? I mean, we are in the uptrend. I cannot tell you, William, how many times have I heard in the last months that we are forming here a distributional pattern. I mean, is there a distributional pattern?
I don't see it. If there is.
I mean, if there is and we don't see it, it should show itself up. How would it materialize, guys? I mean, like, when you think about so bearishly, right? So let's say, like, I'm a bear.
Bearish caps on here. I'm finding it difficult to do this.
Okay, but I mean, like, if I'm a bear in this market, which has such a high momentum, and this high momentum suggests what? It suggests a pause, and it could be a simple pause, and it could be also a complex pause. And we could talk about the complex structure here, you know, of the trading range unfolding, but it's a pause. And then, you know, with this type of pause, it could last. I mean, like, look at this pause right here. It lasted for quite some time before we started moving up. But this high momentum still suggests a pause, whether simple or complex, and then continuation. So until we actually negate this continuation, you can't really talk about distribution. It's kind of like, you know, more of unintelligent talk on chart reading. So I really would like you guys to stop doing this. Now, just to even think about why you do this. Maybe like you have a little bit of like a mindset of being a bear all the time, or maybe there are some kind of worries. You have to look at the chart. You have to look at the chart. So,
well, actually,
there is an upthrust right here. Yeah, there is an upthrust right here. This is suggestive of maybe we could go to this low support here, or to this support, and then try to find a rally of some sort, and then still continue to the upside. I do believe that Bitcoin this year will hit 100,000 and above. I mean, there is just too much momentum, William, for me on this weekly 100%. Chart to like suggest that we are done. Right? It's a distribution. And the funny thing about people is that once we have some kind of, you know, reaction, let's say within the construct of this trading range, you know what's going to happen? Everybody's going to say like, I told you so. And then when it's going to recover, they will not be in this trade. They will not go with this trade. And then when it's up, you know, it all will be forgotten. But I mean, like, the sentiment is very interesting right now, especially with weekends. Okay, so I'll let you talk. I've been ranting.
Yeah, no problem. I can hear the passion there, Roman. So if you can clean up the chart a bit, but you nailed it on the head, though. I mean, we do have a hidden upthrust. Okay, but you have to bear in mind we are trending higher. All an up thrust signifies is a little supply. This would be our first obstacle. However, where does the market have a right to test and still remain bullish? Well, I'd say kind of here into this congestion area. It can easily come down to test and then bounce off to 100,000. But you could imagine all the naysayers in here if the market did come down to here. You know, you can imagine everything's changing and, you know, everyone's jumping on the bandwagon. However, we would have retraced what kind of 40% or 35%. And Wyckoff says the market which can retrace up to 50% and still remain in the trend, the force of the trend. So bearing in mind of taking that going forward, if we hold here, okay, and bounce continue north, that shows uber strength. If we hold here, you know, this shows more strength, but the market has the right to test kind of into this congestion area around here to bounce off higher. But sorry, if you can clean this up, Roman, I was trying to put my bearish cap on.
Mm-hmm.
Now, we're driving up, we have good momentum, kind of feels a little climactic. Then we get supply. Okay, it dries up. Then we push it up, we kind of get sustained volume, and then boom, we're hit with this supply. Then we drive up, unable to rally, on less volume, but it still increases to the downside. Then we see supply here, sustained supply, but again, we're not, you know, we don't retrace deep. It kind of tells us that the bulls are kind of trying to hold the market up. Then these two bars, okay, we could interpret as a lack of demand as we're trying to break through these highs. Look at the volume. And then we're met with supply. Okay, so the only kind of bearish thing I can read from here is kind of the lack of demand, and then we're met with the upthrust, the hidden upthrust. However, this is not for my school of it does not have distributional characteristics. It just tells us we're due some form of reaction to either here or here.
You know what it is, William? I keep thinking, you know, and I kept thinking over the weekend about students and all that stuff. It's just first, sometimes incorrect observations, incorrect deductions that, you know, are being made. And secondly, there is always like a fear of missing out the top. And also, there were quite a lot of leveraged traders in Bitcoin that were leveraging this move up, and they were kind of like hoping on continuation right away. I actually was thinking that there could be a continuation right away. I mean, to me, this spot was 50-50. It's like either it's going to go up or either it's going to go down. But as a long-term investor, I mean, like, you don't keep your stop losses right here. There is no way that you would, as a long-term investor, would keep it. Your long-term investment stop losses are going to be somewhere here. This is your catastrophic stop loss. And when we talk about, let's say, you know, something damaging, like what is the biggest damage for the bearish scenario that we could possibly see, we usually talk about the damage of the structure, and then we usually talk about the downward effort increasing substantially. These two factors are the most important factors for us to define that an uptrend is done and that now we're in the distributional formation. So how would it look on the chart? It would look something like this, where we're negating the gains of the last climactic run. So this would become a sign of weakness. It has to have a consistent supply signature behind it. So there is definitely like a huge distributional behavior from institutions, then some kind of rally that fades, and then a continuation to the downside. This would be distributional. I mean, like, this sign of weakness on increased supply would tell us they are selling. Right now, this is all, yeah, they are selling, but what's the effect of this selling? Very, very marginal.
Especially if you compare it to, look at this volume on this down bar. Same area, this volume. Look at the result. It's not as weak the second time around as opposed to the first time. So that tells you something as well. And this occurs after kind of a no demand rally, if we're thinking in those terms. And this occurs after the run up. So contextually, if you think the force, if all the force of selling we saw here on bar 1 would occur on bar 2, we should print a much wider spread given the volume after this kind of no demand rally. So the market is trying to hold. But like you said, we have our obstacles, our levels in place, but I don't see any. I see zero distributional characteristics here.
Yeah, right. I mean, like they can come.
That's it.
Yeah,
Yeah,
they can absolutely come. And let's
the
discuss
market
this.
has a right to react.
Yeah, let's go to the daily and let's discuss potential structures, right? Of
Okay.
what could potentially come and become. So let's say like the most bullish structure, scenario number 1, most bullish. So how would that look like? I think that, William, we probably, in the most bullish scenario, we are in this trading range, like the highest possible trading range in this structure. We are holding here, so today is acting as a test. And then we are kind of drifting back to the resistance. And when we are coming down, we are kind of testing and we're creating more of the duration for the trading range. So what this would effectively do is this would absorb the supply that came on this shakeout. And with this type of grinding testing action in the upper part, it would tell us that they don't want to sell below 50. That's number one. Secondly, they are absorbing whatever supply has come, and most likely there's going to be some kind of continuation. The second most bullish scenario is going to be probably associated with this support line that William drew. So we might be, let's say, in some kind of phase B here that shows strength. I mean, ability of the price to hold around the resistance, and as David Wise would always say, like hugging the resistance. That's not really hugging the resistance here, but it's holding in the upper part. And then reacting back to the support where, characteristics or characteristically, we're going to see a lot of bearishness. Why? Because supply is going to increase and price will go down. Yeah, so naturally it's going to look bearish. But what is going to be the result of this? So if this is bearish, we need to break this level and specifically this bar right here. So this is our level to break. If we don't break it and we stop here and then we're reacting back, so this is still bullish. But it's less bullish than, let's say, the first scenario that we've discussed. So this is the second scenario. And then the third scenario, which is kind of creepy, but still bullish. And this is going to be this trading range, which is an idea that we still could be doing something like this and then going up. And this is a very complex bullish structure, but it happens. And the main character, structural character, is still phase B, which is kind of like weirdly placed above. Why? Because there is still demand and they don't want to sell. They will sell here, and I think that sentiment here could become really, really bad if we have this scenario. And it's possible. So let me just give you a quick example of how this structure might unfold. So here's a trade desk after the IPO. As you could see, stop in action on the climactic gap in the volume signature, and then we go into the trading range, which has 3 main components. Component number 1, phase A, early phase B. Component number 2, it's the strength in phase B, ability of the price to overcome the resistance, stay there, but then a short-term shakeout capitulation, and then testing. And testing as, component number 3 of this trading range. So we could have a much more complex structure. I think it just depends on, what's going to unfold, whether we're going to hold here. But this is also a possibility as still a bullish scenario where the sentiment right here, like in November, is going to be extremely, extremely bearish. William?
Yeah, I don't see scenario 3 unfolding. Of course, it's possible because I don't think it fits the personality for Bitcoin as of yet. It could, but I think I mean, again, if we hold here or you draw it across here, again, that would be scenario one. But I like what you said here about this bar. This is the all-important bar for me. You know, this is the breakout bar that takes us. Look at the commitment here. Beautiful wide spread that we're holding here. So if we draw this across here, we draw across the highs of this congestion zone. We have a demand zone here. You know, this is what I'm thinking, the demand zone. So this is just the wonderful, wonderful place. And if we wonderful trading range here, should I say, and look at the close of this bar. You know, we dip down. It is a shakeout. No question about it. The volume and the close. You know, we're not closing weak. This bar does not suggest we should continue to the downside. It tells us there's a supplier, but how does it end? It ends up closing, you know, in the top 2/3 of the bar. So I think it's very interesting as of now for Bitcoin.
Well, let's also quickly talk about, we mentioned leveraged accounts, right? So
yep.
The way how I trade cryptos is I trade cash positions, especially if I go to low caps. I still, you know, I started trading it actually just recently. So just 2 months ago, I started actively trading cryptos. And then obviously a thought here for big you know, coins like Bitcoin or like Ethereum or LinkedIn, Polkadot, you know, those type of things. You could use leverage. You could go ×2, ×3, sometimes even more than that. So imagine what people were doing right here in this area, right? So leveraging this trade after quick momentum up, after a lot of momentum on Elon Musk announcements here and here. And then what happens after there is a breakout? It pulls in even more leveraged positions, right? So they're establishing positions here, and then suddenly drift. Remember, I really like this term, by the way, William, so I'm using it a lot.
Yeah, you've coined that.
Yeah, so kind of like a supply drift. And then supply drift always will materialize into some kind of momentum. And this is just where levered accounts were closed. A lot of them. Actually, over 1 million leveraged account positions were closed on this particular bar. That's the latest stat that I've read today, which is very interesting. It's almost kind of like this. Yeah, CO maneuver is just like, oh, we've got, you know, negative news. So we're not going to do anything. And this is not like CO or institutions are like, oh, yeah, you know, you guys are sitting there, this 1 million leveraged accounts, and I'm going to trap you. I'm going to, you know, extract the liquidity, you know, with price going down, and you guys all are going to be out, and I'm going to buy everything from you. That's not how they think. They think more that here they're not going to commit, and they stop buying. And as they stop buying, you know, also professionals might be, you know, establishing some short selling here. So supply is coming in. So that's why the term drift. It drifts down without a lot of CO participation. And then when the price triggers a lot of stop losses, this is where CO is coming in, and CO is saying, okay, there is a lot of liquidity. I still think that the price is going to go higher. This is a short-term value for me. So I'm going to come in and I'm going to buy whatever they are selling. And I think that's what's happening.
But this is kind of to be expected, this part, because it's happened every time before. Every time we've had any kind of meaningful reaction. So it's not as if it's a case, you know, we're trading with the personality of the contract. You know, but you have to bear in mind though, from here, what's that, 64 down to here, say 48, what's that, 16,064, that's 25%. You know, so there will be an awful, like you said, 1 million. You know, how many people can take the pain of losing 25% of their investment
on leverage accounts?
On leverage accounts as we're breaking into new highs. You know, if you think from a macro perspective, you know, there will be a lot of non-professional participants as well, or as we know, involved in Bitcoin. They won't be able to withhold or understand the charts. You know, you stop here or here, not anywhere here. Per se, but yeah, very good, very interesting, especially the insights in the movings into Bitcoin there. Thank you, Roman.
Yeah, okay, well, thank you. All right, well, let's see what else could we discuss. William, you had a trade that you wanted to
cover. Yes.
In the ES? Should I switch the screen to you?
In the ES. Oh, yeah.
Okay, let's do that.
Can you see my screen?
Yes.
Excellent. So this was today. Again, ever since I made that mistake a couple of weeks back, I have been using the 3-minute time frame because it enables you to move in and out a little bit more gracefully, especially in today's volatility. Anyhow, so we're in a downtrend and we gap. Now, I think you may remember a few sessions back that Roman and I pay no attention to gap filling. However, we do use the gaps for structure. And as we can see, we gap down and then it acts as resistance. We kind of get a fake break here and then we come back down. But ultimately, this little purple dot from the gap, it holds. And then we come down here and we get to the US Open. Very interesting. So let me just neaten this up a little. So this is the US Open bar here, and we drive up. Good, solid drive up. We do close off the highs, and we're unable to test, the main resistance level here. And what I see here is an inability to rally, and then we see supply come in as we break the lows here. So ergo, we kind of disconfirm the proposed force of buying on this bar, okay? And then we're met with good quality selling as we break this level of support, okay? So then from here, what am I thinking from here, Rowan? Well, the infamous rally back to ice. As I see these little bars here, you can call it the rally back to ice. We call it the rally back to ice for purity purposes. So we dip down. So from here, I'm looking for a rally. And what do I note? As we rally, volume does decline. However, and the spreads do decline. However, I want confirmation because we do upthrust here. Very difficult to take this trade. However, the second one here, what do we get? Sustained volume, a lower high, a lower close, a lower low here. We can definitely tell the selling pressure. We've got selling behind us. We disconfirm the proposed demand on this bar. And what do we do? And also something else that I should mention is when we break down into these lows, what do we do? Stick to the basics. Well, we're now in a defined downtrend, lower high, low high, lower high and lower low. So as we're taking this play against resistance here, we're trading with the trend. We have supply in the background. We have, look, so I've just noticed that we have come down, but I'm not holding this. This was literally just a play. And then we get these 3 bars here, Roman. Look at these 3 bars. How would you perceive these 3 bars here?
Yeah, actually, we've talked with you about the rally of the low that shows a sign of weakness. And by the way, it is a sign of weakness. It is not a sprain, right? So there's this question about, is this a sprain or is this a sign of weakness? Both sign of weakness and sprain would go below the support, would commit below. You can judge the sign of weakness by the expansion of the effort or the volume signature, that's number one, but also of the extension below the breakdown. So, and we could see here how the spreads to the downside are just so aggressive.
Yeah.
And then,
But there's also another subtlety here, Roman. What do we say about price? Look at the price here. It rivals the open bar. That's genuine supply coming into the market.
Yeah, and wouldn't this be, the aberration, volume aberration relative to the open?
Oh, yeah. Well, no, I wouldn't be thinking this is a volume aberration here because of the context and how the price unfolded. We disconfirmed demand on this opening drive by breaking the lows.
Oh, yes, I see. Yeah, obviously, yes.
And we also break to the downside. We're breaking structure. And at that time, we're also making a lower low.
You know what I keep thinking, William?
Downtrend.
Yeah, you know what I keep thinking about the aberration? It's just like for the volume signature. We should not have the volume spikes that are exceeding, let's say, the beginning of the session volume spikes. No. So that's how I'm kind of so let's just put it in a different context. Unusual volume activity, unusual volume spike that is not seasonally for the session located at the correct place. So kind of like an aberration from that point of view. And then we know that the first rally is going to be very strong. So remember we were discussing this just recently, how I should be waiting on the rallies like this and then just like seeing exhaustion, which comes on those two bars where you are opening the position. But then the next one suggests that finally supply comes in. So, I mean, your entry is like really, really great.
I wanted this bar. I think it was a tad aggressive. We can see a little pop in volume. However, this move, volume does decline and the spreads do decline. You know, but I just wanted further confirmation. And I thought, and in fact, the confirmation came as we broke the lows on this bar.
Yeah,
so
yeah. Well, I mean, I love the entry. It's just kind of funny that it goes into our discussion last week, where my chase for a better timing on entries from phase B to phase C, where phase B shows that exhaustion, phase C shows that okay, supply is emerging, so next bar, this is where that supply is, but you have to wait for it. All right, so
I mean, but as we said last week, we like to create scenarios of what price should do. So as I can see, the closes drift higher, and we hidden spring, we dip under here. I'm thinking, okay, now I'm expecting a rally. So when it comes to here, all I'm doing is just looking for a reason to short.
Right. Yeah.
I'm not kind of reacting. If this, I know it's hypothetical, but if this bar would have closed it under this close, or under here, showed a little bit more supply pressure, I would have entered. It didn't, and we get this bar. That's fine. This bar, we still see supply. Look, it closed off the highs, but then I wondered what people would think of these two bars decline in volume, yet the closes are kind of clustered here. What do you think of these three bars here, Roman?
Well, I mean, my analysis at the times, so let's say that we're in that position, the next bar comes, supply comes in, up thrust action, we close in the middle of that formation. So now demand has one chance to push everything up. And if it's going to fail, then that's it. That's all she wrote. And we're seeing diminishing volume signature, and we're seeing no follow through to the upside, which is suggestive of demand is being exhausted at this point, and we're probably ready to go down. I really like your exits. I mean, like this is kind of like William-esque. Let's just put it this way. Yeah, William-esque. Exit at the support, partial exit there. Exit on the climactic bar at the close with the volume.
That was a limit order on this one. But this one here, this is again where your trader's mind comes in. We kind of get this huge volume. Again, is an aberration, but it is supply, and we do slam straight into the oversold position within the channel and the oversold position within this channel. So you would expect some form of demand, and then we dip under to reverse and close firm. So thinking ahead, I was like, okay, where's the likelihood where the market should test? Well, this here is too close due to the volatility coming in. So where thereafter? Well, it's back up here, and that's where my entry is. So for all intents and purposes, I was like, okay, well, just cover and then look for a potential re-entry around here, which, by the way, hasn't unfolded, but now we can see, oh, look, we are coming back down here. So a lovely little play there. Any questions or anything you'd like to add on here?
There is one nuance right here. I mean, one might ask, why are you closing here? There is supply increasing. It seems like the breakdowns are very clean in both cases. But I want you to talk about how similar those breakdowns are. Because what I'm seeing is kind of the same type of the extension below the support into the close of those two breakdown bars. And then the last one actually expands in effort. So that is suggestive of the demand present and maybe suggestive of some kind of trading range unfolding after this moment. So how did you see that moment, beyond, let's say, the oversold condition I mean, because the breakdown, again, is somewhat clear.
I mean, the breakdown is superb. You know, we break through this level of structure. However, the volume is so high, and when we, you know, what does this bar achieve in terms of selling? Well, we break this local level of support over here, and we do so in fashion. However, look at the volume. We don't really break this oversold position within this channel, which has spanned a couple of days. You know, it's been tested 1, 2. This is the third time it's been tested. But due to the nature of the trade itself, this was a limit order. Okay, from experience, it's always best to enter where the market tells you to exit where the market tells you to. But as you know, I like to exit in thirds. Here, as we dip under and reverse to close firm, you know, it just suggests a rally. And as I said, where's the market likely to test? Now, why didn't I hold any? Is because I think that this needed some monitoring. And obviously, I'm hosting this with you.
Mm-hmm. Well, I mean, and I think, again, you know, that emergence of the demand is so nuanced right there. I mean, like, you got to be thinking, why is the effort so big on the same type of the breakdown result? Well, maybe there is demand there, so we're probably going to consolidate after this. So
Yeah.
what's the effective strategy right there in that moment is just to exit, or at least trim down your position. You can still hold it. I mean, like, I don't see, like, if you're a swing trader, I don't see the reason not to proceed with this. But if you're an intraday trader, then probably most likely exit and just wait for other opportunities. William, this is a great trade. Thank you for showing this to us.
No, you're welcome. But the secret is, if you're looking to hold here, and there are reasons to hold: supply, the rally, supply. Like, sellers are still in control at this time. It's the buyers that need to prove themselves. And that's what I thought about this kind of 3-bar inside formation with declining volume. It's the sellers that are in control. We just confirmed the demand here. They break down structure to the downside. This is the rally. Volume declines, spreads narrow. We see the emergence of supply in 2 bars. And these 3 bars, although they cluster and they hold above support, it's the sellers that need to prove themselves, not the buyers. And then boom, we break through to the downside, which is kind of the mind process I was going with.
Mm-hmm. All right. Okay, well, let's switch gears. We're at 9:50, so we have around 40 minutes left. Let me take the screen, and we're gonna go to our Roku exercise. Yeah, so what do we do here, guys, for those of you who are new to this class and your guests? So we are going through the exercise of simulating trading, historical trading, that is. We want to have as much data as possible. And we picked up Roku, and we don't know exactly what's going to happen each day. I mean, like, maybe directionally we know some, but this is an exercise about analysis. We just want to show you guys how we think and how would we behave tactically, and where we would open the positions and where we would close positions. So in this light green squares, those are points of entry. And again, the reason why there are so many points of entry is because we want to show you where possible entries could be, or where we would be opening those in the whole, let's say, trend. And then the purple squares are the ones where we take partial profits. The red square, we still don't have that, would mean that we are exiting the position. And we're just going through this chart. Let me just remind you what just happened here structurally. So we just had a major sign of strength. And then we go into a trading range where COVID-19 reaction is interpreted as a shakeout in phase C. And then currently we're in phase D in the sign of strength rally, and we're just trading, you know, day by day that sign of strength rally. William, I thought that we made a mistake. I thought that this bar should have been a partial profit taken, and I thought it was somewhat visible, so unacceptable that we didn't take profit there, because this was climactic. There was a little bit of the supply, and then look what happens with the volume signature. It's diminishing on the climactic type of bar after slowing of the momentum in this area right here. So that
Yep.
was showing, the stop in action. This was appropriate to take the profit here, especially going into the mean of the current stride. And then what do we have afterwards? A drift, and then the drift materializes into this increased momentum. This is where we are. So what are your thoughts now with this last bar?
Well, I do remember the discussion we had about this. I think we were umming and ahhing because we did state that every time we do kind of break out on these big widespread bars, that we do consolidate for a while. So perhaps we weren't listening to ourselves.
Yeah, and that
But,
happens. Sure.
yeah, of course.
Let me
As we
increase this a little bit.
oh yes, of course. So as we push up here, oh yes, I remember this. No supply. Look at the volume. In fact, it's the lowest volume it's the lowest volume we can see on this chart, and the buyers are in control. Sellers again need to prove themselves. And then we got to this bar. Apparently, this is supply. I think it's suspect. Look at the volume. We're breaking here. Ooh, scenarios from here, Roman. Interesting.
What
Well,
are you thinking?
scenario A, let's keep it. Well, we could have downside continuation. And if we do have downside continuation, from a bullish perspective, I wouldn't want to see. Well, no, we're slap bang at the demand line here, aren't we? Okay, well, let's talk about bullish scenarios because all I see. Well, no, let's talk about the supply here on this bar because it does break down under these local lows. However, as we've stated, there's no supply in this reaction. There's nothing. And now all of a sudden we're breaking support with a slight pop in volume, and we do close weak. Kind of does suggest lower prices. Okay, so if it does suggest lower prices, what I want to see is scenario A, we drift down with a narrower spread, even lower volume to around this area. Okay, and that would be a potential buy. I'd like to add if possible, or we could dip down to reverse and close firm off here with a slight pop in volume. That would be a good bullish scenario. Or we could, sorry, if you could clean that up, Roman. Or we could just bounce off here and close firm. That would be very bullish because that would suggest that this is, of course, indeed a shakeout, which usually does occur towards the end of little mini or trading ranges. But I remember you said something about that the sentiment is changing because we've broken this structural environment. And now we're breaking into new highs. And that threw me off a little, and it changed my school of thought because here we end with a climactic run on this bar. So if we're coming down here, and by the way, look at the rally up to this area, and this is the reaction down, we can see that the buying quality is far greater than the selling quality. So there's nothing to be concerned about here. So anyway, going forward from this, if this is our reaction, then we have a channel. This could be a potential climactic stopping bar, like it ended here. So these are all my thought processes that I'm thinking.
Yeah, I like this. I like this a lot.
But I see the buyers in control. I'm looking to add.
Let's look at every time we do something like this, right, where we stop. We have quite a lot of supply behind it. So this was a very interesting stop, and that's why we were talking about a change of behavior that started to happen since this moment. It's a change of behavior, not necessarily environmental, right, where we go from, let's say, a trend to a non-trend, and then from non-trend to a trend again. This is more a change of behavior within the structure of an uptrend. This is more a change of behavior that reflects different phases of an uptrend. So let's say the first phase right here, we had a lot of kind of like this buying, profit taken by institutions, the volume signatures increases. Here, we don't have this here. It's like different. So it's almost as if they pushed it out right here into the all-time high, and then they stopped buying. And that stop buying is being shown to us in the volume signature. It's also being shown to us in the momentum. This is just a conclusion of the upswing. And then there is no momentum again in either direction. So from this perspective, to me, it doesn't seem like there is enough selling. So I would say like no aggressive selling, and that probably gives us a little bit more confidence about this bar. And yeah, as William has said, probably the best scenario is just almost instant recovery. So I wonder, William, tactically, let's discuss tactics right now. I mean, we've been opening positions after the reaction, which Wyckoff would say you gotta open after the reaction. And I thought this was really great because we didn't participate here. This was great too. We were a little bit early here, but you know the price did not make it unprofitable for us too much. We did not open positions in the breakout here, which was also a very good call, but we did become aggressive around here and on this opening. So as you guys could see, we want to, within the construct of the uptrend, we want to open the positions at the points of no return after the reaction on the initial reversal where there is a confirmation that the new upswing is starting. So as you could see, nothing was opened here, or here, or here, or here into the ending phases of an upswing. And I think it's very important. So make a note of that, and kind of apply this to a trade. So from this perspective, William, I mean, the biggest question, tactical question that I have is, could we buy the close here? I mean, like if we're long-term oriented investors here, could we buy the close on this non-threatening bar?
I mean, it is incredibly aggressive, but if we read the chart here, I mean, we actually are at a genuine demand confluence as well, and we're trying to break down. You know, think of it logically. We're trying to break through the demand line and this level of support here on this kind of volume. It's extremely suspect. Now, would I buy this? No. I would want confirmation. If someone bought that, or if you'd like to buy it, Roman, I completely understand.
Well, I want to be uncomfortable. I mean, like I'm so kind of like sick of being comfortable, right? So how do you progress as a trader? You get uncomfortable. You get to the spots where, let's say, it's beyond your emotional capacity to execute, but it is the correct execution. So I'm, you know, as you know, I'm kind of developing that type of mentality right now. And then if let's say we open here, what's the maximum risk? I think maybe this level, like 190, as you said, maybe like a smaller bar on diminishing spread, diminishing volume also would be good. But if we're in the vicinity, this should recover pretty quickly, right? I mean, there might be a possibility of a trading range maybe right here, something like this.
Yeah, I mean, because of my intraday environment, I see this bar occur so many times. This action usually occurs during the lunchtime hour on a strong trend day. So we trend up, good quality buying, angle of ascent. This is the reaction, and then just before they start buying in, you get this little down bar, kind of shakes out, and then we continue north. So I'm very familiar. So for buying, buying this bar is incredibly aggressive. However, if you're investing, I mean, there is no supply here, and that's what we're looking for.
And by the way, guys, when we talk about like buying on this bar, there are different type of trades. There are trades based on conditions. There are trades based on structure, and there are trades based on confirmation or failure. So we're just executing the first one. Yeah, let's get uncomfortable, William. I mean, like, I don't want to be too comfortable. I really would like us to,
well, there certainly is a structural edge with a lack of supply.
Okay. Well, let's see what happens. Okay, no follow through to the downside, which is great.
That's healthy.
Okay, let's wait for that confirmatory signal, William, and we'll add to the position. Yeah. Okay. Also, not a bad bar.
I like that.
Yeah. So, what do you like about this bar?
I would buy it. Well, look at the volume. We've got high volume, then the breakdown bar here, and we bounce off. We close firm, and we dip under this bar. If anything, this shows demand. I'd like to buy that.
Let's do that. Yeah, I would say the same.
And we're holding this demand confluence.
So acts as a sprint type Wyckoff
hidden
bar,
spring.
increased effort. So this means that demand is there. And
Yep.
we just seeking that place where in this reaction right here, I mean, like, look at the volume signature. Everything is contracting, everything is diminishing. So there is a little bit of the demand on this bar, but there is definitely more demand on this one and no follow through to the downside. So let's buy it.
Yeah, kind of. I would describe this bar kind of like demand overcomes supply on this bar because of the volume. You know, what 30% larger than this bar here, and we dip under. So it's had an opportunity for the sellers to drive it down, but it doesn't. The buys come in, and we get an increase in volume. I would expect continuation to the upside shortly.
Okay, well, let's see.
That's what kind of that bar and volume was suggesting.
Let's see what happens next. Okay, really good bar. So this is a confirmatory bar,
There you go.
William, right?
Beautiful. Yeah.
Would
Ease
we
of
be
movement.
buying this bar as well?
Well, that confirms buying. You know, with the ease of movement, good. Look at the close, firm. Kind of disconfirm the supply on this bar now. I think you can buy that bar.
Okay, let's do that. Let's be as aggressive as we were with some other entries. Again, I want to repeat this to our listeners that, you know, all of these entries are not necessarily you have to implement them as you go through this uptrend, but we're showing you all possible entries at the most, what we think at the most optimal places.
I wouldn't be going any higher now, though.
Yeah, I mean, like right here,
very...
what do we need to see as a further evidence of bullishness? We need to overcome the high of this bar, right?
Yep.
Because this was a
Yep.
capitulation bar. We need also to kind of deal with this bar right here that had some supply. So overcoming these two levels and for the price being above it, so something like this and maybe going up. So from this point of view, there is no reason to buy like right now. I mean, we already got our shares, you know, of buying after this reaction at the very low price. I mean, like if it still holds here. So, okay, let's see what happens next. Really great breakout, William. I like this. Above the highs we said of the capitulation bar, and also on expanding volume with the gap. So institutions are buying overnight. I like this sign.
Yep. Nothing for me to add. Just a wonderful bar.
Would you say that we're in the trading range right here?
Yeah. I mean, I'll be drawing it across here. Yeah, we're. Yep.
Okay. Well, let's see where it's going to bring us. Could we go to the resistance? That's the next question. Because
well, I think we will. Look at this drive here. This is very good buying. Volume's increasing. Yep. Beautiful.
Yeah. Demand is increasing on both the down bars and the up bars now. And now the up bars are showing the increase of the effort to the upside. So this is bullish. So we are still holding and thinking that we're going to go to the resistance. Here is that drive to the resistance. William, what's your take on the breakout?
Well, you know what I'm thinking instantly. It is a good breakout, but it does feel a little climactic. But it is. We do close 50% of our spread above our area of structure. We do get a surge in volume, but contextually, it is climactic. And what happens after every break? We do react a little, as we can see. So we, apart from here, oh no, even here when we break out, we still do react. So we could partial cover and look for a re-entry.
Okay. Would you like to do that? I mean, like, would you like to partially cover? Okay. Let's definitely do that. Let's
only because it's of the character for this, the personality of this instrument. We can see every time it breaks out, it does have some form of reaction. So why not capitalize on being able to understand this market? That's my thought process.
So let me do this. Let me just say, okay. So, and when we say that we're closing here, this is just a partial close. As you could see, you know, this is just kind of like a training exercise on profit taking or exiting. I probably would, even though we're looking at this type of spots. To me, the key is how we're breaking out. Like this is a really good break above, let's
It
say,
is a
this
good break.
cluster right here. Yeah,
Hmm.
this is probably one of the best breaks. I mean, like, where did we see this before? So this one is not as good. Um, this one right here also is not as good. This one here probably is the best comparison. I mean, this one has a lot of momentum off the bottom, so I wouldn't be comparing it to this. So we need some kind of structure and then break out of that. So let's look at the volume signature and compare it to this one. So
Yeah,
this
that
is
was going to be my next tool.
right. Yeah.
Yeah.
So this is a very, very good volume signature. It's still somewhat climactic, but it relates also to the breakout. So on the climactic type of volume signature, depending on the context, right? Are you going into the climactic action like we did here with this bar, or are you breaking out? And if you're breaking out, I would always assume that demand is overwhelming supply at this spot, and therefore demand is increasing. But what is the measurement of the supply? Like, how much supply do we have here? We could only compare it to the previous instances where we also had a breakout and where also demand has increased and dominated supply, and yet supply has increased. So we are comparing the increase of the supply in both cases, and I would say, William, that supply has diminished
It
relative to
has.
the previous breakout.
Hmm. However, the context, as you rightly said, the context of this run up, it just feels a little climactic. And every other time, I'm not second guessing myself. I definitely would cover there.
Oh, really? Okay.
Yeah.
I'm also thinking like this breakout did not materialize as we thought, and we said that there is some kind of change of behavior in the behavior of an uptrend. I think that we might actually try to get to this line right here. This is the mean. So maybe like there's going to be more follow through, more momentum, which could bring us probably to this line. So we'll have to see. But if we react down, and let's say we are going into the reaction and then consolidation and then continuation here, this will be another opportunity.
Hmm.
So then, this profit taking actually would be really good. Well, let's see what happens.
And also, how far do we react? How far do we react into the breakout bar? And we
Yes.
don't ever regress more than 50% of the large widespread. So bear that in mind as well.
Okay, let's see what
Mhm.
happens next. Here's this reaction. Really good call, William.
Oh, well, that's a gap. No, it's not a gap down, but okay,
Yeah, there was a gap down into the
there is a
open,
gap down. Yeah, okay.
right? Mhm. Okay, so I think this is
Uh,
a very interesting spot for us to discuss because usually, students would say like, okay, well, you saw the supply coming in on this bar, you saw, and now we see this effect of this supply. How would you judge the supply itself and the effect?
well, personally, I see supply there, a little supply, which suggests another down bar. That's all I'm thinking at the moment. I'm not going to read too much into it. It did probe up, it did push up, and does slam down. We do close weak. I mean, there is kind of good volume on here. It doesn't suggest this bar does not suggest no supply. Ergo, I would expect perhaps another down bar. Oh, but how far? We got our positions here, probably into this area then,
Yeah, yeah,
into
something like this.
these three high volume bars we had into this area. Okay.
Yeah. And probably, I mean, like just availability of the supply. And now that we see, I mean, here we could be doubting, supply as we go up. And we could just still think what kind of test we're going to have here. Here, the test is showing to us that supply actually could move the price down. So
Yeah.
if we're going to stop here as the high or low with, let's say, another bar like this, probably another retest later on. So also another possibility to enter. I would not be necessarily entering here, even though I still see this as a bullish action, William.
No, no. Certainly weren't really looking for.
Okay. Well, let's go forward. Okay, so here is this bar, another bar, and look at the beautiful tail here into this upsloping support, and look how supply is diminishing. Would you take it here?
I like this bar very much. I think this is suggesting we're going higher for sure.
Mm-hmm.
Would you buy this, Roman?
Well, I'm practicing something different right now, right? So I'm practicing the uncomfortable feeling, and this is the bar that tells me I'm uncomfortable, so I'm gonna buy it.
Well, if we bought this bar and we're buying this bar, we have to buy this bar because we dip into the supposed supply and we reverse and close out of this area. So we have to buy that bar.
Wow, we are so aggressive here. But again, for those of you who are listening, this is not an exercise about, let's say, precision of entry, so to say. We want to be in the vicinity of the most optimal price levels where we would be buying. But we want to show you as many opportunities to buy as possible. Sometimes, William, and I'm sure that you do as well, we talk to students and students would say like, "Oh, I missed this perfect entry, so I didn't buy after that." To me, that kind of sounds like almost like a withdrawal, because there are so many opportunities after a missed point of entry. Like there are plenty. You just need to know where exactly to buy. What do you think about that?
Yeah, you're spot on. Nothing for me to add about that. You can't get, especially due to the nature of how we're trading this, and we understand where we come from. It's always in the back of my mind here. Who needs to prove themselves? The sellers. We're making higher highs. This was our drive up. This is the reaction here. This is the drive up. This is the reaction. Now this we do confirm as a shakeout, which is bullish. We do get a good commitment into new highs. It does feel a little climactic, and this is our reaction, and we're met with buying. Ergo, why not? We're trading the chart here. And I think the chart is bullish. I don't see any reason not to continue with our buying here, Roman.
Well, I'm also thinking that we just gone through the period of low volume, low volatility.
Yep.
And this, in a way, acts as a minor sign of strength, this upthrust action. And it is an upthrust. It is an upthrust action. We're committing to the upside, and we're returning back into the trading range almost immediately. If we hold here and this becomes a higher low, I'd say that the nature of this environment, low volatility, low volume, is changing. So now we have the volume signature that is increasing. So behind it, there is both selling and buying. So far, the result of this selling and buying is still bullish. So that tells me that maybe the timing is right now for the price to go much faster and to break this cluster right here and then maybe accelerate. If this happens, I want to be more aggressive with my buys on the way up. And especially I would use leveraged instruments right now to trade it, just because this trend also could change. I mean, like we're always like go up and do this.
Yeah.
Now I think that we're going to have a meaningful lag to the upside.
Interesting.
Let's
I like it.
do this. Okay, I would buy this as well.
Okay.
Tell me.
No. There's no downside follow through. We close above this bar. We get sustained volume. Everything is telling us higher prices on this bar, and that's all you have. And in the grand scheme of this context, just from here, little in the background, all this is bullish. And I like what you said here about the low volatility environment when the sellers were unable to capitalize, and now we're coming in. A bit of volatility is coming in, and as you said, who's winning here? Well, it's the buyers still. So ergo, we could expect once they take the reins per se, we could get good moves, good strides, good waves to the upside. Yes, good, Roman. Thank you.
All right. Okay, let's go. Let's see what happens. Nothing happens here on the next bar, so hold in. Right? No,
Yep.
not a lot of supply coming in. Okay, another retest of the previous low. Do you like this bar?
Well, if you're buying this bar and then we try to react and then we dip under to reverse and close firm, it's telling us there's no supply on this bar. Ergo, yeah, you'd have to buy this bar. Yep.
Mm-hmm. Okay, let's do that. All right.
We need to see a breakout soon, though, Roman.
Yeah. Okay. I like this, but I mean, like, they're all buyable at this point. I mean, like, if you miss the entry on the actual reaction, and you're thinking that it's going to go up from here and break out and accelerate, this is still buyable. Some supply is coming in, but what does it do? It doesn't do really too much. We're still holding here.
Yes, technically it's an up bar with an increase in volume. We do probe up into this area. Sellers do come down, but ultimately buyers hold, they sustain, they absorb any selling pressure here. We can see that. The volume and the close. Yeah.
Okay. All right. And William, by the way, we have a comment here that I want to address. So the comment goes like this. The demo simulated trading is not recommended, not even for the beginners, as emotions are removed unless it is for practice. So what's your take on this? Let's kind of deviate a little bit from there.
Well, emotions. It's well, I can honestly say that I'm slightly emotionally involved with this chart here now.
I'm very emotionally involved,
and we're not trading this. Do you know? I think it depends on the mindset, Roman. I am an advocate of practice, and those who know my work very, very well. Practice does make perfect, as perfect as you can be within this environment. Yes, there is a psychological element that I think I'm losing my words here. I'll let you take it away, Roman. I know you feel very passionate about the practice.
I am. I'm extremely disappointed with the comment like this, because again, in this classroom, and only because we have a lot of guests here and so on and so forth. And I mean, like you and I, we're on the same page with this. We do practice our trading. I mean, if you don't practice a surgery, if you're a surgeon, before the surgery, you're going to fail and you're going to lose your patient. If you're not practicing your shooting as an NBA basketball player, you go to the game and you're going to fail. So this is kind of like the same, mastery path that you have to practice. And I've heard this many times. I don't know how many times I should explain this, but, if you feel, guys, that practice is not for you, then don't do it. And you don't have to come to this type of classes. I mean, for us, all of our students definitely practice each class. And we see a quantitative improvement after, let's say, a substantial amount of practice, where people not only improve in their analysis, but when they go to the marketplace and they actually trade, and where emotions are very, very high, what the practice helps to do is it gets away the mechanics of your analysis away, and you can concentrate only on your emotional landscape. So I don't understand this whole thinking. I think that people who and I mean teachers, not the students. Students might not understand the value of this, because trading is very simple. You buy or sell. You just press two buttons, really. There is nothing to it. But I'm surprised when teachers and coaches say like something like this. To me, usually that's like a big red flag, William. You know, when somebody who teaches would say something like this.
I mean, I still practice every day,
I
40
do too.
minutes to an hour and 20
I mean,
minutes. And also,
literally, William, like we do practice, like, you know,
yeah,
and this whole thing comes from practice. I mean, like what
it's a
really how we
necessity.
discussing.
I don't know I know traders who don't practice. However, their setup is different and they work for a bank and they can sustain losses, etc. But, you know, 95% of the traders, or the good traders I know, practice, and they practice on a daily on a daily regime. But it's not only the practice; it's also the journaling and being able to learn from your mistakes. So journaling is also an important part of the practice regime. But you know, as you know, Roman, I'm a big advocate for practice. I still practice. Now, I can kind of understand where some traders feel as if they're not putting their money on the line, they don't have the psychological impact, so therefore they can just buy and sell willy-nilly. Therefore, their practice doesn't serve them. Well, that's down to them and their mindset. You know, I'm emotionally involved in Roku as of now.
Me too. Me too. Well, okay. Let's
Yeah.
go away from this. I mean, like it's up
It's a
to
good question though. It
yeah,
does pop up.
yeah. It always comes, and I mean, I think it's just a preference. I mean, like I'm not gonna like seriously entertain arguing about this with anybody. It's up to you guys what you want to do. So we do
Mhm.
this. Like this is who we are. All right. So let's go on, and a little bit of the supply comes, no effect. So still continuation.
Yep. Either a little down bar or no. Oh, yeah. There you go. Little down bar or no volume. Or yeah, beautiful. That's okay. We're ready now. Look how we overcome this bar. Or just see this attempt to break through here,
Hmm.
although it has lower volume, suggests this is better buying than this bar.
Much
Why?
better.
Well, because here we're not climactic on this bar. Here it's climactic. Ergo, I'd expect upside continuation from this break here.
Yeah.
Beautiful. I like
Yeah,
to see this.
it's all in the volume signature, right? So we
Yeah.
have analog bars that are at the same structural spot, and we're seeing how there is more supply in the first bar than in the second bar. So that diminishing supply at the higher level suggests continuation. So here we are not taking any profits, William, right? So we're holding.
No.
Yeah, and I would say just continuation probably where? Probably to this level right here somewhere.
And also the basics here. Here we know we're holding high lows, and this was the last time. So this was our first reaction. Then we come down here. Then here. Look at the volume signature from the reactions.
Right.
This is no supply. Then we get this breakout, which confirms the no supply. So everything is in order. Ergo, I would not be looking to partial cover here as we would here due to the context, as we've just spoken about.
I went a little bit too fast. I clicked twice on the mouse
That's
right here,
okay.
but there was an entry right here as well, like we've done with this bar. So those are actually totally okay entries. Breakout entries based on the intraday breakouts, where you anticipate, as William has said, after diminished supply, testing bars like this, some kind of breakout uh, on the intraday, and then that is confirmed by the daily close. But let's be fair, we missed it, so that's fine. Okay, so let's continue. Here's our breakout. Okay, well, someone might say, William, that spread is diminishing after the breakout. Supply is still slightly higher. So how would you interpret this?
Well, I would say kind of in sync. Spread narrows, what, 50%? Volume narrows, what, 40%? Volume narrows, yes. Volume reduces 40%, I should say. And don't forget, here on this bar tells us when volume's reducing, there is no supply in the market. Then we get commitment here of buyers, and we're just drifting higher on this kind of volume. There is no supply in the market. Ergo, this is, I'm not thinking this is negative or effort versus result. Everything's in sync for me.
And that's what I wanted to extract from you, because it's important. A lot of students would come and say like, yeah, well, this is it. Like, it's diminishing now, we're done, or something like even further than this, like, oh, it's distributional. It's a test. It's a test of what? It's a test of the breakout bar. And the test so far is bullish. It doesn't go into the body of the previous breakout bar. It stays up, above it, closes above it. So that's still bullish.
Yeah, there's no retracement into this bar at all.
Okay, next bar is a continuation of that bullishness. And this is exactly what we were anticipating, where, the price will go a little bit faster now. And we are going to have the breakout over this bar. This is probably still the best call, William, for today's session. The profit taken on this bar. I also like the uncomfortable. And see, this is what's so interesting, right? So people are saying like, oh, there is no emotions. This was really uncomfortable right here. I mean, like, to come in on these two bars and execute like that, right? Rather than seeking a confirmation like on a bar like here or here, which we open the positions as well. But this is where the practice actually pays off. Okay. All right.
I was going to say, there is a pop in volume here. It doesn't feel as climactic, but we could still have a couple of bars maybe to the sideways before we continue north.
Yeah, so, the uptrend always would go like this, right? We'll have some kind of smaller stopping actions. So we could potentially have some stopping actions. So here's the support cluster. The most important bar for us right now is this one right here. So we could potentially go a little bit lower, and we should be expecting this, or continuation to the upside. We don't know exactly what will happen. We just know that it's still bullish and we are following the trend.
Yeah, I mean, this does suggest there is a little supply here on this bar. I was going to say, I would expect another sideways bar just to try and eradicate whatever supply there is here.
And here it comes, an inside bar, and there is no follow through to the downside. It might come, it might not. Doesn't really matter. I mean, stop losses are there. I think that we've opened all of the positions in this session. How many of them? 6. Should have been 7 with the breakout bar, but everything looks beautiful. Okay. Less supply again, suggesting continuation. Wow. So here it is.
Yeah, look at this. Beautiful. Okay.
And here is that again, change of behavior. So we've talked about the change of behavior right here, that something's different is going to be. It was actually more of low volatility, reflecting that supply was really low, just, and then here we said after this is where supply has been absorbed more, right? So supply increased, demand has come, and there was more of the absorption. And then we said that again, we're going to have a change of behavior in the uptrend behavior, and we're going to accelerate now. So momentum is accelerating. Demand now is much more dominant than the supply. Look at this reaction right here. Nothing there. Okay.
Absolutely nothing. Yep.
Okay. Well, William, are you a little bit concerned we're close to this resistance?
No, not as yet.
Okay. Let's continue. I'm thinking, where is the end of this upswing?
Well, I know we're getting very close, because every time we've broken out, we've all, we're just broken out here. Are we going to have a little sideways action? But what's interesting is I'm actually eager to jump on board here, because this is the drive up, beautiful volume. This is the reaction, beautiful, no volume. Then we break up, good surging volume. Then we get this bar, a little bit of indecision, but don't forget, it's the sellers that need to prove themselves. So we kind of disconfirm supply on this bar, although this does suggest a little selling. I'm looking for another potential entry.
Ooh, very aggressive here. Wow.
It is aggressive, but
Mm-hmm.
as you said, though,
Mm-hmm.
the stride's changing. Look how we're moving up,
Yeah.
inability to react. So I want to be able to capture these moves, because if you think where we come from, we have this large structural kind of trading range. We're building cores. We've got a lot more to go to the upside.
Mm-hmm.
So
are you saying that you want to buy this particular bar?
Not that bar. I would like a confirmatory bar.
Okay, so would you place then a stop buy? Let's say above what, 290?
We could place a stop buy. Yeah, no
Or
problem.
are you looking for something like this?
I mean, a dip down to reverse and close firm, or we could break above.
Okay.
Any of them.
Yeah. Well,
we don't need to get Tikaitis here, because we trading the chart here.
But tell me what you want to do. So.
Just to be on the safe side, if we may get an inside bar. Okay, potential A. If we get an inside bar, then I'd like to stop high the close of this bar. If we dip under this bar to reverse and close firm, I'll buy scenario B. How about that?
Okay. Well, and actually, William, we're at 10:30, so let's just have one more buy. Let's see if we're going to have that or not, and then we're going to stop.
So an inside bar or a dip under.
Okay.
There we go. We do dip under. We don't close. We do close firm. Yeah, there's no supply. Look at the volume. Yep, I'll buy that.
Buy that. Okay. So this will be our last buy. So this is actually much more uncomfortable to me to buy that bar than the bars that we had here after the reactions. But I understand the logic here. I mean, like, if we've changed the behavior, right? So we might actually, expand more, right? We could have a continuation on the expansion, and this could be, a significant drive up. So yeah. All right. Well, with that, guys, that's it for today's session. If you liked what we went through, and this is our usual Monday routine with William, and when I send Monday morning routine, that is Monday morning for me. For William, this is actually an evening time, early evening.
Yes. About 6 p.m.
But what a great way to start the week, just to get your mind into this analytical state where, you start thinking, and you start thinking not just about the markets as we go through them, but also you practice and you go through a lot of kind of like analytical tools that we use. You refresh them, you learn something new. And then obviously, we had a lot of comments on these classes from the students, and majority of them say that, your interaction, your knowledge, the way how you analyze, we're kind of like copying that, and trying to establish this in our own analysis. So that was the major benefit and the value that we're seeing our students are extracting from these classes. William, if I would ask you a question, I mean, in your opinion, what is the biggest benefit for somebody who would join us for our Monday sessions?
I think the biggest benefit, if I was trying to put my shoes for someone learning this, is I think you get the benefit of having two Wyckoffians that approach the markets with the same kind of foundational knowledge, yet our application is somewhat different, yet we're both on board with each other's ways of that we enter and exit the market. And I think it shows. I mean, a lot of the time, I think our analysis complements each other, and for that reason, I think you get a dual tone perspective of the markets from both Roman and I think that is of great benefit. I don't think there is anything in the world like this, to be honest, Roman, where you can ask two Wyckoffian practitioners questions, and you can see us analyze in real time as well our different approaches, and I think that offers a great deal to the potential student.
And we didn't have any live trades today, but
No.
you know, I think that in the previous like 3 or 4 classes we always had it. So sometimes we will, sometimes we won't. We kind of showed you, a trade from the previous session, so that worked out really nicely. But we would show you some of the trades, especially William, on the intraday, some of the trades that we do. But primarily, William, I see this as it's kind of like a practice class. To me, that's probably
It is a practice class, and we dissect the chart. Sometimes we can spend 20 minutes on 8 bars discussing all the scenarios about what could happen, and I find it very entertaining because I'm still learning from Roman when he shows me
I'm learning from you as well. Yeah,
you show me your perspectives of the market, and amplifies my thinking. And we will always be student of the markets. However, I extract great value from this, and it's thoroughly enjoyable, and I hope others extract value too.
All right. Well, sounds great. Well, with that, guys, that's it for today. Again, for those of you who are interested in signing up, we do have 2 products on chart reading. One is the on-demand, where William and myself give 3 to 5 sessions. Those are the basic sessions to intermediate maybe level. Also, David Wise had 1 session in that series, and then he passed away. He passed away during that series, so we dearly miss him. So just want to mention his name, and I know that he's listening to us today. Hopefully, together with R.D. Wyckoff, and giving us a green light, William. I'm sure he would be very proud. Okay, and with that, that's it, guys. If you want to email us, if you have any questions, please email us at wyckoff.associates@gmail.com, and we'll see you next week. William, thank you.
Excellent. Well, thank you very much, Roman. Goodbye, everybody.
Bye-bye.